Good afternoon from the floor of the CME. This is Chris Robinson with your Traders Exclusive comment today for the 15th of February, the day after Valentine's Day. It's been a pretty good love affair in the soybeans, corn, and beans here in the past several days. As I'm sitting here talking to you, we're making fresh highs in both old crop corn and new crop corn. You've got new crop corn above the big important psychological number at $4. We'll see if that can hold true. But what you really have is the funds. The funds are now long about 40,000 corn. That's a positive for your producer. They're long about 140 to 150,000 contracts of soybeans. You've also got soybeans hanging in there pretty good. They're about 20 cents away from their recent 7-month highs. But we may, I think if we were able to extend those highs, you'd see fresh money coming in. And then the third thing is the wheat. Wheat market suffered under a lot of sell pressure from managed money for really the last year or so. They've cut their short position from 100,000 contracts to about probably 75. You've got the Chicago March market above the 200-day moving average, which can be a pivot for the longer-term trend followers out there to start moving some money. So I continue to watch that. The managed funds are more important right now than the weather. It seems to be. Certainly in South American weather, it remains to be a non-issue currently. We had some issues earlier with too much rain and not enough rain in parts of Argentina. Argentina was kind of split. That's kind of moved to the wayside. So what are we focused on? We're focused on technicals and money flow. I continue to watch that. If you're a producer, the decision now is with beans at 10.20, 10.30, and corn at $4, guys that were thinking about planting beans more when corn was 370, 360, now at $4, those acres which people thought may be moving from corn to beans, maybe they're moving back. So we'll see. Do we have to get new crop corn a little bit higher to ensure that those acres of corn are produced? That's what I think we're going to watch between now and the March 31st planting intentions. Very, very important. But the trend is higher. And I'll close on one thing. The trend is higher in spite of the fact that there's been some negative concerns floating around that Mexico may stop importing corn from us or import less, or vice versa as well for lean hogs. They're a big export partner. And the interesting thing is, pull up a chart of corn and of lean hogs. Those are the two items specifically that Mexico buys from us heavily. And despite all the negative rhetoric, prices have been climbing. So Mr. Market thinks that there's something else afoot. I think that's something I would continue to watch. Be very careful. Don't trade the news. Don't try and trade the headlines. Generally, when something hits the mass media, it's already said and done. Case in point, last week we had a big article in the Wall Street Journal about how dismal wheat farmers are, the prices that they're facing in Kansas. And again, go look at a chart. Prices really bottomed out about 3-4 months ago. So usually when the media gets a hold of something, it's already turned. I would continue to watch that moving forward, but until we get a real significant change in supply and demand, it's all going to be about money flow and technicals. That's about it from the floor of the CME. This is Chris Robinson. If you're looking for help with your hedging or your trading, give me a holler.